right, let's do this. Week 31. Wow, it's really been 30 weeks. Yeah, coming up 31 weeks. So week 31, outlook number one. Got even more development. Let's start out with the British pound futures per usual. So I ended up being just wrong, I would say, as far as reading the price action here. After seeing the liquidity draw, which it was, these definitely were liquidity draws, but price decided to forego mitigating this price gap here and just achieve this target, which was this low here. So we ended up actually getting a break of structure of this low, which, as you can see, we then got a pullback to mitigate this price gap, or I should really say this inefficient pricing here that led us to price moving lower. And so because we have price moving lower, we're looking for continuation of the sells, which is aligned with the overall analysis. It just would have been nice for price to pull back if it was going to make this impulsive bullish run here to those equal highs that we had marked out a while. But as of right now, it seems that price is full on bearish yet again. The structure is fine, the momentum is fine, everything is shaping up for continuation of sells. Now, if we are looking at the scenarios here, this scenario is still possible. Um, the other scenario that we have marked out is the fact that because this is a break of structure, we have fully transitioned back into bearish price action, I would say. Um, as of right now, but it is possible. It is very, 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 very possible that price could be pulling back inside of this bullish. I guess we could call it like a little bit of a range or so into some sort of area of interest. And the area of interest that I'm marking out or that I see is based off of this mitigation sequence here. So, firstly, we have this mitigation here in which we had some sort of inefficient pricing. All right, let me go. We have inefficient pricing here, right? And because we have the inefficient pricing, and I would say this is valid inefficient pricing one because we did not invalidate the low there. So this is inefficient pricing, this fill. That inefficient pricing led to the creation of this sponsor candle here. And so this sponsor candle was completely validated in its mitigation, which led to the bullish move or continuation of the bullish move. So this was the final point before this large bullish run here. And so after the creation of that sponsored candle, that led to the creation of an actual price gap because we have two actions of mitigation of raw inefficient pricing, mitigation of a sponsored candle, and now we have a price gap created based off of those action mitigation. So it is highly possible that price is only looking to return to this area of interest here in order to frame up continuation of buys, which would fit this scenario for looking for continuation of bullish opportunities, aiming for these equal highs here. That's the narrative that I can see right now for the bullish plays. For the bearish plays, I would also like to see scenario two would be a response or a pullback to mitigate this area of interest here and then continue lower. Or scenario three is just continuation of price action lower, which would be in line with the overall narrative of this market so far. All right, so the bullish scenario, once again, scenario one is looking for a price to pull back into this area of interest following the action of mitigation sequence of this inefficient pricing, the sponsor candle, and then we would look for opportunities to trade off of this price gap, looking for a price to continue higher. Scenario two is continuation of the bearish narrative in which we would pull back to mitigate this area of interest here and then continue lower, or scenario three is just full on continuation of this bearish price action as this would just absolutely die. But my bets are on the fact that we are moving towards this area of interest. So I'm really interested to see what happens from here to see if we get bullish plays framed up to start moving towards these highs again. One, we have relatively equal highs here. This, I don't know, this price action just seems very manipulative to me right now. It looks like price is setting up to move towards a real objective rather than what it's showing currently. All right, so we'll get rid of that, and I'll leave that on the chart for now. But we know what these actions of mitigation are. I'll leave just the main one, which is sponsor candle mitigation, and then we have this area of interest here. We know this is a break of structure, so we are looking at continuation. So be very cautious if you are looking for opportunities off of this. Be very conservative with your models if you are whatever you're trading, if you are looking for that scenario. All right, moving on. NASDAQ. Okay, so we have finally achieved our target, um, or continuation of the achievement of the target. And I would go on to say that we have finally transitioned from a bullish run as anticipated into a bullish range. I'm not going to identify the bullish range as of yet, as guilty as charged. I've not done the complete analysis, but following the outlooks up to this date, we know that it's somewhere down here, right? It's somewhere down there. So this is a very large range, and we are looking for continuation towards equilibrium of the range, which is a pretty deep pullback, but we may need to look for some other opportunities for price to refuel itself if it fails to continue lower in the immediate. So what does that mean? It means that we would be looking for price to pull back to higher liquidity pools inside of the premium of this range that I haven't annotated yet, and then we would look for selling opportunities to continue lower. Or scenario two is this range is actually false and we continue on with the bullish price action. But all evidence to the contrary, all price action to the contrary, this is shaping up to be a very fruitful and very valid range. And now, how do I identify where the range was set up is based off of the break of structure of the most recent structural point. Well, what is that most recent structural point? Well, we identified this structural point here, but that ended up being a liquidity draw. And then we identified this as our most recent structural point here, and that ended up being a break of structure because we had the body close below the low here. So because of that, we are in a bullish range from the macro perspective. But I have these two short position tools set up. The first one is the position that I had taken. The second one is the position that I missed. I just absolutely did not see this. It was very valid in the sense that we have an action mitigation here, which just looked very weird. But then we had the pullback to mitigate the price gap, which was the second opportunity for swings, and that led to the sell here. I did have, these equal highs marked up, but that's because I did not see this in real time. So I was, I guess, hallucinating in the fact that I was looking for price to mitigate this area of interest here, then run higher and go lower. But looking back and seeing this in back testing, I'm like, oh yeah, this makes it's perfect sense. Of course, why would price pull all the way back here to achieve its objective when it already set up the entry to continue lower? So that's that. So now we have all of these marked out. I'll get rid of this, everything. This is still very valid for a liquidity pool for a price to pull back to, but we have our structural point. I'll leave this up for right now because this is our marker for the transition into the range. So we have our break of structure here, and it's a matter of time. I'll probably annotate the range later, probably in my tomorrow's meeting, and we'll look at the range and identify it. But we obviously know where the high of the range is. Now we just need to figure out where the heck the low of the range is. Brownie points for anyone who can figure that out. All right, and so yeah, so that's NASDAQ right now. We've transitioned in summary to a bullish range. Dow Jones. Dow Jones is in a range. The most recent price action, I mean, this is still, as it stands, a range. But the most recent price action is we had failure of bearish price action to continue lower based off of the areas of interest that we had, which is cool. And so what ended up happening actually is price decided to perform a liquidity draw. That's the most recent price action that we have right now. This is still a little bit squirrely. I mean, the only thing that we have to leverage or to analyze are this low here, this liquidity draw here. Oh, I will say that we also have an action mitigation there, but we would need to see price continue higher in order to frame up any trade setup anyway. We also have these relatively equal highs here, which is basically a liquidity point. So we have a few things, a few objects to assess to see if we have any opportunities here. But I'm gonna wait for a little bit more price action to give a little bit more clarity on where price is going before I look for any opportunities here on the Dow Jones. All right, so I hope you learned something. That's week 31 outlook number 1. Peace.